Hey, how you doing? Uh, Questions come up, and I get this question all the time, really. Uh, Adam, how do I make sure I'm not paying too little tax or too much tax out of my paycheck? And it's a great question. And every year, I advise my clients to check this thing called a W-4. If you're an employee of a company, chances are you've completed a W-4 at some point in the past. All right? This W-4 really is what regulates how much tax is taken out of your paycheck. So if you complete it one way, you're going to have too little tax taken out, in which case you might wind up owing money, come April, right? If you have too much tax coming out, the way you're going to know is, well, you might feel the pinch, so to speak. You're going to see that you've got a small net balance on your paycheck. You're struggling from paycheck to paycheck, trying to make ends meet. That's one indicator. Another indicator is that maybe in April, you're getting a really nice income tax refund. And you can go around to CPAs and tax preparers and, that promise great big refunds. If you're getting a great big refund, you're doing yourself a disservice, and the person doing your taxes is doing you a disservice as well. All right? Think about it. What's happening here is that based on your W-4, you're paying more in taxes than you should be. So now you're paying too much in taxes. What's happening to that extra that you're paying that you shouldn't be paying? Well, the government is saying, thank you very much for an interest-free loan. We're going to take that money and we're going to invest it. And we're going to make lots of money off of your money. Thank you. All right? The money that you should be investing, the government's investing on your behalf. Well, not on your behalf, right? Using your money. All right. Then in April, they're going to give it right back to you. Now, they made lots of money on it, right? But they're not giving you any interest on the money when they give it back to you in April, are they? No, they're just giving you the excess that they borrowed from you. Well, that's not cool. So what I advise all my clients to do is to check their W-4s every year because, changes in life happen every year that could affect how much tax is taken out. So we're trying to find a sweet spot where you have not too much taken out, not too little taken out, right? And once you find that, then, we can move forward, maybe take some of those savings, all right, and apply it to some investments which will really pay off in your retirement. Now, let's say you are getting a really big check in April, okay? Again, this is not a good thing, because that means you've had less money throughout the year to use for investments. But it's not too late. We can take that extra money, all right? You get a nice big check, let's put it down on a great investment, all right? And then for the following year, let's make sure that we regulate it properly on the W-4 so that we can make investments all throughout the year. All right? Hopefully this helps and you understand what a W-4 is for and how we can use that to regulate the taxes coming out of your paycheck so that you don't have too much or too little taken out and that we can properly use that money to invest in your future so that you can enjoy your retirement one day. All right? And maybe even an earlier retirement. All right, great. If you have any further questions about that, just comment down below or message me and I'll be happy to help you.